So, if you're a successful investor, you definitely know the feeling, right? You make a fantastic move, your portfolio is growing, and then, boom, the tax bill shows up and takes a huge bite out of your returns. What if you could stop that from happening? Well, today, we're going to dive into a really powerful but often overlooked strategy to do exactly that. I mean, really think about it. You work incredibly hard to build your wealth, but with every single profitable sale, every bit of rental income, a pretty big chunk of that just goes straight to taxes. It can feel like you're running on a financial treadmill, just fighting to keep what you've already made. And this isn't a small thing. Over the entire life of your investments, the slow, steady drip of taxes can be the single biggest drag on your portfolio's growth. It's like this constant headwind that's always slowing you down. But what if you could turn that headwind into a tailwind? All right, so let's break this down. Let's talk about what we call the investor's hidden hurdle. Because really, understanding the problem is the very first step to getting past it. Here's the heart of the issue. Whether we're talking capital gains, profits from a real estate deal, or income from a partnership, taxes are always there, waiting. And this constant chipping away means your net growth, what you actually get to keep in your pocket, is always less than what you earned on paper. Okay, enough about the problem. Let's get to the good stuff, the solution. There is a much smarter way to grow your wealth, one that's actually designed for tax efficiency right from the get-go. The solution is something called a private growth structure. Now, I want to be super clear. This isn't some shady loophole. It's a financial tool that's specifically set up within the tax code. Think of it like a protective shell for your money that allows all kinds of investments to grow in a completely tax-sheltered environment. So the bottom line is really simple. This is an established, fully compliant way to legally shield your investment growth from taxes. Just imagine that for a second. All that growth, year after year, compounding without that constant drag from taxes. So you're probably thinking, okay, this sounds amazing, but how does it actually work? Is it super complicated? And the good news is the mechanics behind it are surprisingly straightforward. It's really just a simple three-step process. First, you establish your private account. This is the vehicle that provides the tax shelter. Second, and this is absolutely key for it to work, you appoint a professional third-party manager. They'll handle the day-to-day investment decisions based on the strategy you set. And then step 3, you just watch your assets grow inside this structure, completely shielded from taxes. Now, this part right here is critical. While you get to set the big picture investment strategy at the beginning, you can't personally direct the trades. You can't, for example, call up the manager and tell them to buy this stock or sell that property. That separation is what keeps the structure compliant with the tax code and, most importantly, locks in those incredible tax benefits. So what does all this tax-free growth actually mean for your portfolio? Well, it means unlocking a whole new level of investment freedom. Just look at the difference here. On the left, you've got typical investing. Every single gain, every bit of cash flow is a taxable event. But on the right, inside this structure, that tax liability is just gone. Whether it's rental income or profit from selling a business, it can all grow and compound without that constant tax drain. And check out how flexible this is. This isn't just for your basic stocks and bonds. You can place a huge range of assets inside this structure. We're talking things like real estate partnerships, private equity, venture capital, even art and other hard assets. As long as it's under the control of that third-party manager, the growth is tax-free. Ultimately, it all boils down to this one simple idea. The entire strategy is designed for one purpose, and one purpose only, to let you keep more of your hard-earned money, so it can keep working for you, not for the tax man. Okay, so the money's growing tax-free, which is fantastic, but how do you actually use it? Let's talk about maybe the most important question of all. How do you get access to your wealth? Right? This is the key question. If you just pull the money out, doesn't that create a tax bill and kind of defeat the whole purpose? The answer is actually pretty simple and, well, elegant. You don't withdraw it, you borrow against it. You can take a loan against the value of your account at any time. And since loans are not considered income, you get the funds completely tax-free. This lets you use your wealth for anything you want, all while your original assets keep on growing in their tax-sheltered home. So we've covered the big problem with taxes, we've talked about the solution with a private growth structure, and we've seen how it works. So what's the next step if this sounds like something that could be a fit for you? Every single investor situation is unique.
The real power of this strategy is unlocked when it's tailored specifically to your portfolio, your goals, and your overall financial picture.
So, if you're tired of watching taxes eat away at your investment returns and you want to explore this smarter way to grow your wealth, the next step is super simple. Just click the link you see to schedule a quick 15-minute strategy call. It's a totally no-obligation way to see if this structure is the right move for your financial future. Thanks so much for tuning in.